What is going on, investors? Hopefully you guys are having a great weekend out there. Welcome to our Saturday stock show. We'll recap what happened this last week, but more importantly, kind of preview what is coming up this next week. We'll go over the S&P 500. We'll go over the NASDAQ. We'll take a little bit of news. We'll focus primarily on the upcoming Coinbase IPO that is expected to launch next week. We'll even jump into the S1 filing and compare that to their Q1 revenue guidance. Spoiler alert, it's phenomenal. And what could Coinbase's IPO do to the price of Bitcoin? We'll talk about that. And then finally, we got lots of earnings coming up next week. I know we've been a little light on the videos on the channel. Well, guess what? That's going to change big time over the next 30 days. We've got a slew of earnings next week, primarily bank stocks. So we'll talk about that as well. Let's kick things off by taking a look at the S&P 500 over the last month. This thing's up about 4%. It bottomed out right at the end of March and is really just printing green candles ever since then. The same story is true for the NASDAQ. The QQQ bottomed out on 326 and has just been printing green candles ever since then, up about 6.9% over the last month. Now, in terms of news, we talked about this on our last week's show, is that Cathie Wood's newly launched Ark X, which is like her space ETF, witnessed staggering inflows of $536 million. Now, you can go to the Ark website and sign up for notifications on what stocks they are adding or subtracting from this fund. And what I've noticed is there hasn't been a lot of activity. And so I stand by what we talked about on last week's show, is that Cathie Wood launched this ETF primarily to get money flowing into the company, into the ETF, and she is going to use that money on more high-profile IPOs that are expected to come in the coming months and year ahead in the space sector, primarily maybe like a SpaceX or other companies related to that. So we've seen that the ETF hasn't done a whole lot. Okay, it's sitting right at 21. I think it IPO'd right at around, or went public right around $20 per share. I would actually expect that kind of performance to continue. You're probably going to be able to scoop this up into the 20s, but as soon as something like a SpaceX rumors that they're going to go public, well, guess what? That will create more interest in this ETF because investors are going to connect the dots and say, well, this is an ETF that's going to scoop up major amounts of those shares. Now, Twitter discussed a $4 billion takeover of Clubhouse. It's an app I haven't used, but it's apparently like, think about it. It's like almost like YouTube, but like radio. You're just sitting there. I think you're kind of, it's almost like party lines of the 80s. I wasn't quite old enough to experience that, but I've heard it described like almost like party lines of the 80s where a bunch of people are calling into a number and you can kind of have chats. I've seen other things this week. Rolex announced new watches, and Kevin O'Leary and a major watch dealer got on Clubhouse and discussed them. It's actually something that I wanted to check out. So it does it looks like it's gaining some traction, and it was interesting that Twitter discussed a $4 billion takeover. My guess is that these types of takeovers, these types of mergers are going to be very difficult in the social media space, a Facebook, a Twitter. These companies are going to have difficulty consolidating more properties in social media since there are many in Washington on both sides of the aisle. If it was just one party, the Democrats or the Republicans, that didn't like these companies kind of having massive control, I don't think this would be a big concern. But it's actually both parties agree that maybe consolidation in this industry, a little more competition, a little more independence among more companies in the social media space would be a good thing. Now, speaking of Washington, President Joe Biden is willing to negotiate on his corporate tax rate in his infrastructure plan. Now, he introduced this infrastructure plan. It's a $2 trillion plan from what I've seen. Now, I'll admit I haven't read the actual bill, but from what I've seen commentary, that it is not necessarily all roads and bridges. That actually the vast majority of it actually is not roads and bridges, but it could be other infrastructure like the internet and maybe other like clean energy stuff, which could be considered infrastructure as well. But how he's proposing to pay for this is increasing the corporate tax rate to 28% from 21%. It's actually a pretty big increase, quite frankly. That's a 7% increase. And if you follow the channel, when we go over the financials on these companies, you can take a look at kind of the taxes that they pay and the impact that a 7% increase would pay. Now, look, we don't have to have a long discussion on this, but the companies will, cut costs by laying off workers, those types of things to make up for this 7% increase. You think these CEOs are going to take less money or earn less money? Yeah, right. They're not going to do that. They're not going to print less money for investors on the bottom line either. No, they're going to cut costs. They're going to cut dead weight, things of that nature. But the fact that the president has announced that he's willing to negotiate, well, I would assume that if we do see a corporate tax increase, and look, this is still, I wouldn't say it's a long shot, but I would say we've got lots of sausage to make before we get to this point. But my guess is you might have maybe a blended average, a little bit lower average. But going from 21 to say 23, 24 probably wouldn't have a large impact on stock. But going from 21 to 28 and closing maybe some loopholes and things like that, well, I think that potentially could. Now, on to our main story for today. Coinbase is expected to start trading on the NASDAQ on April 14th, just 4 days from now, under the ticker symbol COIN. And I thought it was interesting. They launched this IPO on the same week, literally every single major bank reports earnings this week as well. In my opinion, this is going to be a gigantic IPO and probably justified as well. We've seen some gigantic IPOs over the last few years, but this one I think could justify that. And I'll show you why in a minute. When we look at these financials, holy moly, they are fantastic. Now, Coinbase's price target, this is amazing. Its price target was lifted to $440 by D.A. Davidson. They were at $195 before. Okay, so he looked at the Q1 results, which we'll talk about here in a minute. Coinbase released some Q1 revenue guidance. And when he looked at that, and I'll show you why, that they basically more than doubled their price target. I'll show you why here in just 1 second. Now, Bitcoin Roundup, Dan Loeb of Third Point Capital, he's holding his Bitcoin for his clients, his company, on Coinbase. And so I actually thought that was interesting, is that we're looking at these institutional managers. Where are they holding where are they holding their Bitcoin? Now, they could do it themselves. They could, download it on the private keys or whatever. They could do it themselves. And maybe that's something that companies or big institutional investors kind of evolve to. But I thought it was interesting. He's using Coinbase. And there's certainly other, big money managers like Dan Loeb that are doing the same thing. And so if Coinbase can capture a lot of that institutional assets, it appears that right now they have about 122 billion of these institutional assets. Well, look, if institutions, companies are getting on the back of Bitcoin, and why wouldn't you when you look at the chart here, which we'll do here in a minute, look, this is a number that could skyrocket. Now, take a look at this. Coinbase Global provides Q1 preliminary estimates ahead of their listing. So I thought this was interesting. They note that Q1 revenue will be about $1.8 billion with trading volumes at $335 billion. Adjusted EBITDA will be $1.1 billion. Whoa, that's pretty high margins. And net income, so actually being profitable, between 730 and 800 million. Now, these numbers in a vacuum might not mean a lot to you, okay? Here's what I want you to keep in mind. Q1 revenue at 1.8 billion. This is Q1. This is for 3 months, okay? Net income between 730 and 800 million. Now that you got those numbers in your head, I want you to come over here. This is the S1 for Coinbase. This is required by all companies that are going to go public, and they often include financials. Here's our year end. So this is for 4 quarters. Remember, I just showed you their guidance for 1 quarter was 1.8 billion in revenue and 730 to 800 million dollars in net income. You're going to want to watch this, guys, because here's our year ended from 19 to 20. Take a look. We've got revenue up here on the top line. We'll just take a look at this total revenue line. In 2019, we had $533 million in revenue. Last year in 2020, $1.2 billion for the entire year. And guess what Coinbase did? They announced in Q1 revenue will be 1.8 billion. So they're going to do more in Q1 than they did in all of last year. Guys, you want to talk about explosive growth? Can you see my mouth drooling? Gosh, I wish I already had some shares of this company, and I will be watching this IPO very closely. Don't be surprised. In fact, I wouldn't be shocked at all. In fact, I'd be shocked if it doesn't pop on its initial day. But this might be one of those IPOs where even if it pops big time on its first day of trading, still possibly could be good value when you factor in this type of growth. Now, they do have operating expenses here. We've got transaction, technology, sales and marketing, general administrative. We'd assume this. Okay, so now let's come down to this total operating expense line. We went from 580 last year. We more than doubled our top line, but take a look. Our operating expenses really only went from 580 up to 868. Whoever the heck is running Coinbase is doing a phenomenal job, okay? Because take a look. Our operating income went from a negative 45, and we basically, I guess that's like a 10x, up to a positive $408 million off $1.2 billion in revenue. We have operating income of $408 million. This company is looking like it could become one of the largest ones in the stock market. Okay, obviously they have competitors and things of that nature, but if they can get out in front of this, guys, these are incredible numbers. Okay, here we're looking at net income in the quarter at 730 to 800. Again, this is what they guide. That would be double what they did in all of last year. Okay, I know that when they become a public company, there'll be larger expenses. Okay, I would expect at some point maybe our operating income to pull back a little bit. They'll have some stock-based compensation, things like that might impact these operating income numbers. But oh my goodness, keep an eye on the 14th and what happens to Coinbase, because in my opinion, this looks on the surface right now like an absolutely home run company with these types of revenue growth, this type of gross margin, basically. My goodness, this looks absolutely phenomenal in my opinion. So we'll see what happens with this. Now, what I think is going to happen when you have the Coinbase IPO, it's going to be a gigantic IPO. It's going to take a lot of the oxygen out of the room. We got bank earnings coming next week, but I think there's going to be a lot of focus, especially on channels like CNBC and whatnot, and Bloomberg and the financial networks and things like that. And certainly here on YouTube as well, I expect many, myself included, probably to have a solo video just on Coinbase. Look, it is going to put a lot of attention on Bitcoin. And guess where Bitcoin is right now? Here's a chart of Bitcoin. We showed this last week. We fully expected it to get up to about $60,000. That is about where Bitcoin is right now at the moment, is right at the all-time highs. Not quite, but we're a fraction of a percent away from all-time highs on Bitcoin. My opinion, what could happen with this Coinbase IPO is it could just create a lot of interest, not only in the financial markets, but Coinbase is now going to be, introduced to a lot of casual investors that are saying, well, whoa, this Coinbase IPO, maybe I need a Coinbase account. Maybe I need to start buying some Bitcoin on Coinbase. And that could be the catalyst to shoot us up and over 60,000 on Bitcoin. You'd like to see a big green candle up in here to the 61, 62 range and up and away. Your guess is as good as mine is how high Bitcoin. I've seen estimates from 100,000 to 2,000 to $2 million on Bitcoin. God knows where it could go. Now, if for whatever reason we get rejected here at 60,000, which I wouldn't say a high probability, but there is a probability that sellers step in here at 60,000 because look, they've been doing that for the last month or so. Well, there's a clear sign of support down here at about 50,000. I know that's a wide range, but this is a pretty, that's like 12% or so off where it is now. A pullback into the $52,000 range, $50,000 range, somewhere in this range, my opinion, creates a buying opportunity for Bitcoin, especially if you don't have any exposure to it already. I think just the momentum behind this, throw at least, for me, it's probably I'm probably a little overweight Bitcoin in my portfolio at the moment, just because it's gone up so much over the last few months. It's probably a little over 10% of my investable assets. Okay. When you count my house and other assets I have, it's far less than that. But when you talk about investable assets, yeah, right now it's actually probably about 10% because it's just run up so much. Now, moving on to our earnings next week. So I wanted to talk about this. I've gotten some comments on the channel like, hey, where's the videos? Look, we're always going to have a lull here on the channel. After earnings season ends, we have a little bit of a lull. There's usually about a 30-day window where not a lot of companies are reporting. But guess what? It ends up picking right back up, and your subscription feed on my videos will be blowing up over the next few weeks. So if you don't like videos, you might want to hit that unsubscribe button. If you do like earnings videos, well, you might want to consider subscribing, because next week on 4/14, we got Wells Fargo, Goldman Sachs, JP Morgan, all reporting earnings. Again, this is on the same day that we're expecting the Coinbase IPO. Most of these companies, if not all these companies, will report pre-market. So expect the videos to kind of trickle out as the trading day is happening. The next day, you got 4/15, you got Bank of America, one of my largest bank holdings, just individual bank holdings. You got Pepsi. We'll certainly do Pepsi as well, one that I don't think I've broken out on a video in the past. So we'll talk about Pepsi. We might talk about Charles Schwab. I really like Charles Schwab's products and highly suggest that it's a company that you add to your arsenal, especially if you're only on a Robinhood or a Webull or one of these apps. I would recommend that you graduate to a Fidelity, a Schwab, things of that nature. Now we've got Citigroup also on 4/15, BlackRock on 4/15, and Delta Airlines, it appears, on 4/15 as well. We'll probably do a mix of these companies. Certainly Pepsi, likely Citigroup, likely BlackRock, and maybe Delta Airlines as well. Depends on the price action of the stock as well. And then finally on 4/16, you've got Morgan Stanley. Again, all the major banks are reporting their earnings next week. And the reason why it's important to focus on the banking sector is we can probably launch Coinbase into that group now as well. There's certainly a financial stock, but you've got eased buyback restrictions. That is good news for the bank. So if you've been hiding under a rock, the Federal Reserve didn't allow major banks to do stock buybacks and increase dividends. That has been happening, I really think, for a little while now. I think from the summer of last year, my estimation on the timing of that, but it is for a while, banks have not been able to do elevated stock buybacks, and they have not been able to increase the dividends. Now, those restrictions are starting to ease, if not go away. And that is why when you come over here and look at the XLF, which is the financial ETF, if you don't want to pick winners and losers in the bank sector, the XLF is probably your best bet, because it has a nice basket of these bank stocks, and they do a nice job of rebalancing it. It's also likely the most liquid financial ETF that you have in there. It will be interesting to see if they add Coinbase at some point. I don't know the rules of this ETF, but you see here, this thing bottomed out in January down here at $29 and has literally been ripping higher up to about $6 to $35 per share all the way up here. And we are locked up into this upward channel here with this. And until you break the lower end of this channel, look, this thing is just going to keep ripping higher, in my opinion, because you've got the dividends, you've got the buybacks, you probably have everything is just kind of behind these bank stocks to continue. You also have interest rates climbing, or at least in the shorter term, they have been climbing, which is also bullish for the banks as well. They also had those large account reserves, which we've talked about here on the channel. When the pandemic started, the banks started setting aside large amounts of cash because they didn't know if buyers would default on credit cards, car loans, home loans. They thought they would see a wave of defaults, but the fiscal stimulus, and in fact, it's not. There is plenty of employment out there if you do need a job. And so we have not seen the banks have to utilize those reserves as much as I think as much as the banks, and I think some investors, maybe even like myself, anticipated. So all that being considered, it's all bullish. Now, if for some reason next week the banking sector sells off for whatever reason, there are some levels of the support here at $33, which is about $2 less than where we're at, which doesn't sound like a lot. But when the stock, or in this case, the ETF's at $35, $2 is actually would be a pretty large move, but you get pulled back down here to 33. Well, that would be a buying opportunity. And then I know this sounds really silly, but there's major support when this rally started right down here at 29. But that is $6 where we're off where we're at today, which is roughly 20% drawdown in this. You get a 20% drawdown in the banks. Tell you what, a lot of other stocks are probably going to look attractive as well. So that relatively meaningless, but if we get a pullback down to this moving average, again, if the banks disappoint or for whatever reason, I think that could create a buying opportunity, just something that you want to keep in mind. Now, buybacks to pop 30% this year. This is from financial analyst. This is from Citi, which is also a bank that will maybe execute some buybacks. But so buybacks are going to increase, and it is led by the financials because they had their ability to do buybacks kind of sunsetted a little bit. And so now that they're allowed to do that, they will probably accelerate them and do them to a major degree. And then just like what we just talked about, the fact that they had a lot of reserves set aside for defaults that likely haven't happened and potentially might not happen, the banks might be able to use that money for more buybacks and more dividends. So they already had pretty good balance sheets. And then you add on top of that, those reserves could get dumped back into usable cash at the bank. And well, guess what? Buybacks and dividends probably likely coming forward for the bank stocks. Now, if you don't have any exposure to the bank stocks, I would encourage you to develop that over, not necessarily like next week or something, but have it a part of your portfolio. If you're overweight tech, if you're overweight clean energy, if you're overweight whatever segments of the market and you have no exposure to banks, well, I think you could work on that over the next 6 to 12 months because there is a lot of catalyst, in my opinion, behind this banking sector. And again, we've got lots of earnings next week, lots of videos coming here on the channel. Thanks for tuning in today. Again, hit that subscribe button if you like videos on all these individual companies. This is just the banks. The following week, we are going to have all the major tech stocks, all the major stocks that we've talked about here on the past on the channel will slowly be coming back over the next weeks as they report earnings. I'm excited. Hopefully you guys have a great weekend. Maybe check out a little bit of Masters, a little bit of baseball. Maybe hit the links yourself. Hopefully you guys have a great weekend. Good luck with your investments.